Good evening, everyone. Oh my goodness, I don't have my headset. Oh, let me pause this thing. Holy crap. Hey everyone, this is James coming to you from Dividend Stock Talk, where we talk about dividend investing for monthly cash flow and weekly cash flow. Today it is Tuesday, April 25th. It is 9:05 p.m. And we're going to be talking about the stocks we did this week. Because today's Tuesday, we get our list emailed to us on Monday. We take a look at what we're going to do, and guess what? To get over my cough, I take a sip every few minutes, and I don't cough all day. It's a wonderful thing, but I have to constantly be drinking. I don't know what it is. Anyway, let's just jump right on in and see what we're looking at today. All right. We get our dividend on steroids. We bought two positions this morning. Yesterday, Walmart and DFS. So let's quickly take a look at them, and we'll see why we did that. They both have a dividend coming up in the next 10 days. So that's why we bought them. So let's take a look at WMT. Bring that up. Walmart. Everybody knows Walmart. It's a worldwide company. And let's quickly take a look and see what Walmart's doing. Walmart starts the year off at 69, drops down to a low of 62 real quick in the end of May last year. Jumps on up to the high of 75, drops into a channel of 72, goes for a while, and drops down to another channel of 70, trades all year round there. And in the beginning of end of March, she hit that 69 area, and she's settling in right around 75 today. Now we jumped into this on yesterday at the opening of the day, and let's see where we are with Walmart. Now Walmart, it's we got in at 74.84, and right now she's at 75.05, and we have an exit at 76.72. So we're into a profit right now already, only $134. It's not a lot, but we got $24,000 riding on it. Okay, so 134 is not a lot. But let's quickly take a look at the seasonality so we have some kind of indication of where she's going to be going. All right, and here's where we are right here. Okay, this is where we are. We can look at a little tiny spike right about there. Hypothetically speaking, it's not guaranteed. Remember that, not guaranteed. It's just hypothetical. So we have two choices. One, you can listen to me cough, or I can sip on my little concoction here. It keeps me from coughing. All right, so that's Walmart. And let's take a look at the other one back where we were. Now we already put these into the our software. Let's quickly take a look at them again. Okay. WMT, Walmart. Let's plot the dividend. Okay, dividend would be the 25th. So May 9th for Walmart. And there we go. All right, so let's get rid of the blue line there. It's kind of distracting by just clicking on the average. Now the average, as you can see, with Walmart is buy it before the EX date, 10 days prior to, collect the dividend equivalents or let it ride up for a couple of days and then get out. Because as you can see, Walmart going into the EX date, the stock usually goes down and stays down, usually goes sideways after that. So this is not what I want to hold on to. I mean, granted, they got a 2.72 yield. You know, the yield's not the worst in the world. You know, volume of 5.7 million. You know, so it all looks good. And the chart even looks good also. Let's take a look at the Walmart chart for the last 10 years. That'll give us some kind of indication of where she might end up in the next 10 years. We never know. But as you can see, 10 years ago, she was down in the $47 area. She went sideways for, what is that, a few years? What was that, 3 years, 4 years, 5 years? I don't know. Jumped up to the $74 area, went sideways for quite a while, took a little dip, then came back up to $74 area again, right where she is. So it's not, the greatest chart in the world, but hey, it's Walmart. It doesn't look that bad. It looks pretty good. So it's something I wouldn't mind holding on to if I had to. Let's get back to where we were. All right, that's Walmart. Let's quickly take a look into this WMT. And there we go. Okay, 8.7 million shares, 2.72 share yield, and the dividend is 53 cents. All right, so it closed at 74.78. The high was 75. The low was 62. And it only has a 1 year target of 74. So basically, they don't really think it's going to go anywhere. So why bother? Why bother? Because I want to get that 51 cents per share. Okay, so everything looks good with Walmart. So we got to that one. What else we got? We got DFS. Quickly take a look at DFS. DFS. Now DFS starts the year with $57 area, and she goes sideways for like a whole 6 months, right up to the election. At the election, she goes from 56, jumps up to the $70 area, and goes sideways for quite a bit, drops down to $67 area, which is where she at now, 67.64, and we got DFS at 67.16. 67.6. Is that right? If we get DFS at 67.16 and she's at 67.28, we should be up. Why are we down? That doesn't make sense. Yeah, 800 shares at 67.16. 800 shares, 67.16. All right, whatever. It says the last trade was at 67.28. Anyway, 67.16, that's what we're looking for. We're looking to hit the target of 68.84. Now let's see what DFS looks like in the seasonality. It looks like here we go. It's not the greatest uptrend in the world, but it is an uptrend, no matter how you look at it. So we just have to wait for it to go up a little bit, get our dividend, and then get out, sell it for a profit, or however we want to look. Because right now we're trying to get 2.5%. Is it going to hit 2.5? Is it going to hit the 68.84? I honestly don't know. And 68.84 is way over here. And it's quite a bit for it to hit another high. It might not. I don't know. We will soon find out, won't we? It does keep me from coughing. So that's a good thing. So it's either the coughing or the constant drinking, one or the other. All right. Now, SKT and BMO, we bought those on the 11th. So if we bring this up, there's the 11th there, which means the EX date was today or tomorrow, and we didn't reach our target. So what's going to happen now is most likely the date of record is probably going to be Friday. So Monday or Tuesday, we'll end up collecting the dividend on those two stocks, and then we will reset the sale price. So we'll be able to collect the dividend and resell it for a profit. So make sure you tune in again on Tuesday night to see, that's next Tuesday night, to see how that progresses. So in case you'll understand. See, SKT and BMO, they're good companies, don't get me wrong. We didn't hit our 2.5% target, but we are going to collect the dividend, and we are going to resell it for a profit. So wait until next week, you'll see that. All right, so that basically covers all of this. And we're still holding on to Macy's. Macy's is at 29.28. Let's take a look at Macy's real quick. Macy's. All right, we're looking way up here, which is in 33. She had 3 down days in a row again, Macy's. I honestly don't know what's going on with Macy's, so I can't help you out with that one. But we have quite a bit of shares in that one, 1621. And if it keeps it up, who knows, in a couple more weeks, we might end up collecting another dividend on Macy's. All right, so we're out of here for this one. And let's jump on into the option plays and see what option plays we did this week. Now, I wanted to go over some of these this morning or this afternoon, but I didn't take a look at it at all today. It seems that we're down this week. We're down, 1,100 this week. Doesn't make me happy camper, but let's just take a look at the trades and see what's actually going to happen between now and Friday, because Friday is when the options expire. BK is the first on the list, so let's take a look at BK. BK. All right, BK starts the year on a trading range of 40, goes sideways for about 6 months, and right around the middle of October, she jumps from 40 all the way up to 48, goes sideways for a couple of months, drops down to 44, then comes back up to the 47, 48 area where she is right about now. Okay, now she's at 47.23, and we got BK at 47 and a half. So the only way we're going to make money on BK is if she goes up. So we're 23 cents into BK. So if she stays the same, we might break even. If she goes up, we're going to make our profit. So we're looking for it to stay above 47.5, which we have to keep an eye on that one. Does not make me a happy camper. DFS, let's quickly take a look at that. Hey, the Discover card. All right, the Discover card starts out the year with a 56 and a half. Trades for about 5 months. And right on election, she jumped from 56 all the way up to 71. Trades 71 for a couple of months and drops down to 67, where she is today. Let's find out what she says. The 66 and a half, 67. So as long as she stays above 67, we will be in profit. And she is above 67. Alrighty then. Now, DHI, DH Horton, never heard of them. All right, DHI starts the year at 31, goes sideways for a couple of months, makes the high of the year up at 34, and then takes about 5 or 6 months for it to drop to the low of the year of 26, goes sideways for a couple of months down in that area, and right in the beginning of the year, she jumps all the way back up to where she is today at the $32 area. So DHI, let's quickly take a look at that one. All right, we're looking at the 32 and a half, the 33, 32.65. So we're actually in the money in this one, and we need to stay above 33 to be in the money, to be profitable. And we have, 5 down days in a row? So this one's going to go up a little bit for us to be happy. That's not good. So why is he down today? I don't know. But hey, we got until Friday to see what happens. Make sure you stay tuned for Thursday. INTC, Intel. Intel starts the year off right here at 31. It takes about a month for it to hit the low of 29. And then it takes about 4 or 5 months to hit the high of 38. Drops back down to a trading range of 35, where she goes throughout the whole year. And at this moment in time, she's at 36.87. So at 35 and a half, 36, as long as she stays above 36, we're good to go. We have 150 contracts of Intel. As long as it says above 36 by Friday, we'll be good. Works for me. All right, so Microsoft's coming up next. MSFT. Wow, now that is a lovely looking chart. She starts off at 51 at the beginning of the year. For about 3 months, she goes sideways. And then right in the middle of July, she goes from 51. She soars all the way up to the $65 area where she is today at $67.92. $67.92. And we have the 66.5, 67 calls. And so as long as she stays above 67, we'll be good to go. So that one's good. We like that. Sherwin-Williams. Let's take a look at Sherwin-Williams. SCHW. Schwab. Not Sherwin-Williams. Schwab. Okay, so Schwab starts the year off at 29.50. Goes sideways for a few months. She makes the low of the year back in July at 24. Jumps up to that trading range of 31 for half the year. Right around election time, she goes from 31. Jumps up to the trading range of 41. It goes sideways for a while. She's settling in right around the 39 area. And let's see what we're looking at. We're looking at the 38.5, 39. And we got it at 39.62. So we have 50 contracts at 38.5, 39. So that one's in the money also. TJ Maxx, I'm going to bring it up, but then, it's kind of pointless because TJX, because we're waiting for that one to hit 75. And she's basically not going to hit 75 for a while, so we're going to be short on that one for quite a bit. All right. She's basically going sideways for the whole year, right in the $76 area. But we're waiting for it to hit 75 before we can jump out. Okay, WMT, Walmart, which is the last one we're looking at. WMT, Wally World. There we go. Wally World starts out at 68.89. Makes a low of the year, 63. From there, she jumps up to a trading range of 73. Goes sideways for a few months. Drops down to 69. Goes sideways for a bunch of months. And then for the last month and a half, she's up to 75.05. And where are we? We are at a lovely 74 and a half. So we're way in the money on this one too. So we only have to really look out for 2 of them this month that are kind of borderline. I shouldn't say this month, this week. We need to keep our eye on just 2 of them because 2 of them are very close. I am out of my drink. Oh my, I got 1 sip left, and hopefully I can get through the rest of this before I start coughing again. All right. So all the option plays are well into the money. There's only 2 of them that we're going to have to keep our eye on Thursday, and then again on Friday. So I'm going to see if we have any questions. If there's no questions, we can just jump on right to ooh, I'll tell you in a second. Let's see if we have any questions first. No questions. Gotta love it. You guys, if you have any questions, just ask away. That's the only way you're going to find out anything. Let's get back to where we were. And, nope, not this one. It's the other one. Okay. Someone asked me a question, I believe it was last week. How do I find my target prices? And I'm going to give you my answer. I don't find the target prices. The market dictates the prices to me. Now, I'm going to give you a perfect example of that. All right, let's go back to here. Here's our stock tips right here. If you get access to the software, you put the software, all right, better yet, let's go here. The Market Watch. No, I don't want the market. All right. We get the Market Watch. Today is the 25th, which is right here. I'm going to do the 26th. The 26th is tomorrow. That's not going to do you guys any good either because you'd have to buy everything today in order to qualify for tomorrow. All right, so Thursday, I'm going to pick out a few and then show you what to do with them. All right, because you can still buy these in order to make a profit on them. All right. Once you get your list of dividend stocks, what you're going to do with the dividend stock, you're going to take the stock symbol, Okay, Western Gas Partners. Okay, they're paying an 87-cent dividend. WES. All right, get out of there. All right, let's put in WES. Now, WES was paying its dividend today. Oh, wait a minute. It's 25th, paying on the 27th. Okay. Now, we're going to plot its dividend. There it is. Now, on average, had I bought WES 10 days prior to the EX date, I'm going to show these to you in a minute. Prior to the EX date, and then get out before the EX date, I would have made a profit, hypothetically speaking. Now, before I show you the actual numbers, let's see what the charts would have said. All right, the closing price was 59. The high and the low of the year was 45 to 67. That's great. I don't have the projection on here, but I have it on the other one. Let's go here. It was WES, correct? Let's reset and put in WES and go ahead and hit go. All right. WES has some good days, and only 1 year that wasn't very good, and that was 2010. Can we overlook that? Sure, why not? It closed at 59, the high of 67, the low was 45. These are all numbers that are actual numbers. This is not hypothetical crap. This is all factual numbers. It's got a 1 year target of 67. That's awesome. Look at that, because it's 59 now. It has a target of 67. Its dividend is 87 cents, or 86 cents. It's a yield of 5.9. That's almost a 6% yield. That's awesome. Okay? Now, has a 30-day average trading volume of almost 300,000. Okay, again, that's awesome too. Let's take a look at what the 10-year chart looks like. To give us an idea, if we hold this for 10 years, what can we expect to look at in the next 10 years? Okay, so it's going to be popping up anytime soon now. Western Gas. All right, it's a good-looking chart. It's not great. It's not terrible, but it's pretty good. All right, 10 years ago, we could have got it at 1685. Okay, she had nice volume, nice climb. Look at that. She made a high of 77. But then in 14, that was like 3 years ago. For some strange reason, she dropped in the last year to 32. Now she's back up to 60. So all in all, over the last 10 years, it looks good. It has all these dividends, couple of splits. That's great. You know, everything looks wonderful. Okay, let's check out the seasonality. Let's go back to here. WES. Okay, WES looks great. The trading range of 49, trades for about 5 months, 49, jumps up, trades a couple of months at 54, jumps up again, trades a few more months in the $60 area, and this is where she is now. Okay, great. So what's the seasonality look like? Okay. Now remember, we would have bought this stock 8 days ago because the EX is on the 27th. Let's bring this up. The EX date's the 27th. So 10 days from the 27th, 10 days prior to the 27th would have been the 13th. Okay, we should have gotten in first day in the morning. So let's look at the 13th and see how she looks. Okay, see. 13th would have been right about there. See? That's a seasonality chart. Let's take a look at the actual chart. Okay, the 13th was right there. Okay. Now, WES, we're looking for an 87-cent gain. She opens up at 60.65. So 80, 87, what was that? 61.43, something like that. And she actually didn't make it. 61.43. She actually didn't make it. So here's the question. Now, just because the software, let's go back here. Just because the software says this, okay, this is what it's, I'm going to read it to you and you tell me, okay? Okay, the closing price is 59, great. The high was 67, the low was 45, and its 1 year target is 67. All of that looks absolutely awesome. Okay, it does, really. What doesn't look good, this is where you have to make your choices, okay, is number one, you're missing an 08. Number two, 2010, it's 65 days for it to hit its target price. Okay, so it averages out to around 10 days. Do you really want to hold for 10 days? Or do you want to disregard this one and say, hey, look, you know, on average, she's usually out in a very short period of time. All right, here goes my last sip, guys. That's going to soothe the coughing beast. So I'm going to end up coughing in a very short period of time because I'm out of something to drink. But here's what bothers me. Number one is it's 65 days in 2010, which brings your average up to 10 days. Usually when this double digits here, I usually just get rid of it. Down here, I usually never trade anything under 500,000 unless there's a dividend king. Now I will do dividend kings because there's a few dividend kings that trade under 500,000, but WES is not a dividend king. So I honestly could not tell you whether or not I would have done it. Okay, that's what it looks like. Let's take a look at another one to give you a better idea. Let's go with C. C is Citigroup. Okay. Citigroup starts the year at 46, goes sideways for almost half the year. Right around election time, she goes from 48, jumps up to a trading range of 60, goes sideways for quite a bit. Now, let's put C into the software, see what that says. Reset. Put the C in there. Hit go. All right, it's missing 09 in 2010. So do you really want to trade it? I honestly don't know. Can't tell you at the moment. But let's quickly take a look. Closed at 59. High was 62. The low was 38. Has a 1 year target of 64. 16-cent dividend. 1.1% yield. Now, I'm going to say no right off the bat because I'm missing 2 years worth of data and the low interest. If I get stuck with it, I'm only getting 1.1%. I can get that from a CD. So we're going to say no to Citigroup. Let's go to find a stock pick. No, we have. Ooh, Kroger. Kroger's good. No, Kroger's got 1.6. But Kroger's is a household name in a lot of parts of the country. MUR's got 4.3. TCB, country's best yogurt, 1.8. Don't like that one. SO, 8 days. I'm not so sure about that one. Smucker's, 2.3% yield, 1.2 million, 127. Okay, everything looks good on Smucker's. Let's take a look at what the chart looks like. All right, so let's take a look at Smucker's. All right, SJM. All right, we just looked at that one. Let's look at SJM. SJM. All right. All right, here's SJM. Click on the average, get rid of that line. You're holding an average of 1.5 days. Look at this, all ones and a couple of twos. All right, I can deal with that. Now look at the chart. Now remember, this is an average chart, like 1 year on top of the others, 10 years worth of data. So it's been around for quite a while. Now, if I want 10 days prior to the EX date, it looks like it's going to go up. It's just going to go sideways, and it's just going to continue up. So all in all, it looks like a good stock to get in and get back out of. Okay, the closing price is 127. The high and low is 157 and 122, respectively. The yield is 2.3, and it's got nice volume and a nice yield. Okay, everything looks great on that. So let's jump on and take a look at what the chart looks like. SJM, which is Smucker's Jam. Is that right? SJM? Yeah, that's right, 126. All right, she starts the year at 126, goes sideways for a couple of months, spikes on up to hit the 152 trading range for a couple of months, drops back down, takes quite a while for it to drop back down, hits a low of 122, goes sideways for a bit in the 127 area, jumps up to 140 for a little bit, comes back down to the 126, 127 area again, which is where she is today. Now, how do I distinguish the price? I distinguish the price by the market itself. Okay, a lot of people will tell you where there's support and resistance. Okay, so you have support down here at the 124, 125 area. You got resistance, yearly resistance way up here in the 155 area. But most recently at the 141 area. Okay, so how do I distinguish my price right now? If I was going to trade SJM, it doesn't have weekly options. Okay, so I got 24 days to figure out SJM. And I want to do my vertical spread because I like the vertical spreads because I can profit 3 different ways. The stock stays the same if it goes up, or if it goes down a little bit, I can still make a profit. So let's quickly take a look at Smucker's. It's trading at a 126 area. Now, this looks like it could be support. As you can see, did it go below 125? No, it didn't. So 126 looks like it can be a support. All right? So it may go just a tiny bit lower. I don't think it's going to go any lower. This is just my estimation, my guess. That's all anyone's going to give you. Nobody's going to give you concrete, hey, it's not going to go below this, because they just don't know. From what the chart is saying, you have support here at the 125, and you got support way over here at the 125 also. 125, 125, 125, 125, and right now she's at 126.93, which is close to 127. So can she go a little lower? Yeah, she probably can go down to 125. Okay? So if I was going to pick this one right here, which is the 125, which gives me support. Okay? So as long as it stays above 125, I'm in the profit. Do you understand that? Okay. As long as the stock stays above 125, I'm going to make money. How much money am I going to make? Not a whole heck of a lot, because it's a $5 spread. Between 120 and 125 is a $5 spread. So the most I can make is $5. But if I'm paying $4.55 for that, the most I can make now is 45 cents. 45 cents is not a whole heck of a lot of money. However, let's look at all the facts. Number one, Smucker's, which is a household brand, a household name. A lot of people have heard of Smucker's. Number two, she's got excellent support here at the 125 area. Okay, 125, 125, 125, 125. And right now she's at 126.93. She's $2 into the money. Okay? So she's quite a ways into the money at the moment. So the most I can possibly make if I buy this at $4.55 is $450, which is 10%. Now, for those of you who want to gain 10% for 1 month, this is not a weekly trade, this is a monthly trade. Okay? So if you take 10% and divide it out by the 4 weeks in the month, that's 2.5% per week. That, my friends, is not that bad for relatively decent trade. Now, what I mean by relatively decent, take a look at it. Number one, it's Smuckers. It's a good company, name brand. All the software are pointing in the right direction. Okay, the stock price right at this moment is $126.93, which means it's $1.93 already into the money. So if the stock stays the same where it is, okay, it just means it goes sideways for the next 24 days. You look at this. We got 24 days left. All right. If she goes sideways for the next 24 days, if she goes up, I make the money. If she goes down, at least almost $2, because it has to go below 125. That means way down here. Let's open this up. Okay, here's where she is right now. Okay, she has to go way, way down. Oh, my drink is all gone, so now I start coughing again. Darn it. Anyway, how do I pick my prices? The market dictates the price to me. It's at 126.93 right now. As long as she stays above 125 in the next 24 days, by the third Friday of the next month, I will make the 10%, which is 2.5% per week. So do you understand all that? That's how you get the target price. The target price is made up by the market, not by me. So, with that being said, let's go to one more example, and then we'll be out for the day. Okay, that was SJM. Let's take a look at WEC. Yeah, WEC, all the numbers look good. 59, 61, okay. Good. Average target of 1.7 days. The high was, it closed at 59. The high of 66, the low of 53. Its target is 61. The dividend is 52. Yield is 3.4, and its trading volume is 1.9. Everything looks great. Let's take a look at WEC. Got that one. We should look at that one. All right, WEC. WEC. Plot the dividend. Let's get rid of that. Okay, so if we get in 10 days prior to, looks like she's going to go up for a couple of days, and then she's going to drop down and then go sideways with an uptrend. Okay, everything else looks good. The 10-year chart on WEC. Let's take a quick look at that. WEC's energy group. Did we already look at? No, we didn't. This looks awesome. This is what every investor likes to see. Okay, 10 years ago, we would have got this bad boy at, come on, at 24, and now she's at 60. That's more than double. Great. All right, so she more than doubled in 10 years. And then she paid out all these, look at all these dividends down here. See the little diamond with the D in them? Those are dividends. Okay, so she more than doubled the price in the last 10 years. All those dividends are great. And let's take a look at the quick chart. WEC. WEC starts out the year at 57. Goes sideways for a bit. Jumps on up to make the high of the year at 66. Goes sideways for a bit there. Drops down to 60. Trades for a little bit there. Drops down to 58. Trades for quite a bit. Jumps up to 60 and goes sideways into where we are today. Okay, so let's put WEC. WEC. WEC and enter. Okay, so WEC, let's get out of there. You know what? All right, here's WEC. Again, this is a monthly option. So what we're looking at WEC, we have the 6073, which is where she is now. As you can see, she's got a lot of support down here at the 57 area, even in the 58 area. For the last 90 days, she's been trading right around here. So at this moment, she has a little bit of support in the 59, $60 area, which would be this option right here. But how much is that option costing? All right. Here's where you get your target price and whether or not you do it. Although all the software looked good, everything looked great, and it's pointing in the right direction, this is the option that I would pick. Okay? So it would give me the three goodies I look for. Up, make money, stay same, make money, or go down a little bit and make money. Those are the three that I'm looking for. This is not giving it to me. The only one here that I'm looking at would be the 55.60 because the 55 is way down here and the 60 is right here. As long as it stays above 60, I want to make money. But it's not allowing me to do that because it would cost me $5 to buy that. Now, the price could be off skewed because we are in aftermarket. Aftermarket, you can tell the bid is 57 to 66, which is a huge spread. Now, during the day, that spread collapses, which means this price right here is going to be different. Okay? The spread here is different also. Almost $2 to $6.50. That's a huge spread. So during the day, that spread will be a little bit different, and I might do that trade. Okay? Other than that, I'd have to do this one here, and I would only make money if the stock goes up because I'm paying $1.10, right? And the 61, it's a 60. So my break even would be 61.10. Okay? Do you see that? So I'm paying this. It would have to be 61.10 for me to break even. So anything above 61.10 is where I start making money. And right now, she's at $60.73. So I only have one option on this. The stock has to go up for me to make money, so I'm going to say no. The one I did just a minute ago, I showed you a minute ago how I got target price. All three have to be there, and this doesn't have it. Just because the software says so doesn't make it a good deal. Now, this is a good candidate for the dividend capturing, okay, because you can buy the stock, capture the dividend, and then jump back out. But for an option play, no, it's not a good candidate for the option play. So let's go back and see if there's any questions. If there's no questions, I'll be out of here because my voice is not going to hold out much longer. No, right, we're out of here. So you guys have a great day. And if you have any questions,